P2P Lending. What is that? Hello everyone, I'm Joel and I'm going to explain about peer-to-peer lending, which is also known as P2P lending in India. This is an age-old concept where people earn interest by lending out their surplus money. This business model came into existence much before banks came. Thus, P2P is an old wine in a new bottle. P2P is a process where the lenders and borrowers come together on the same platform in order to undertake financial business. P2P lending has a secure lending platform which is backed up by technology. It helps to lend money to borrowers of different risk categories, and hence the investors are guaranteed with high returns. The risk is due to the defaulting by the borrowers and also the platform risk, and which is why the interest rates are always high. The key factor which has led to the success of these companies is, instead of investing their own funds, they try to bring the lenders and the borrowers and they are matched in a single platform. This business is worldwide success and it's going to be a success in India too. This is an awareness video to show that P2P business is up for all investors and platform creators. Over to Amijit.
This is Amijit. So the question that arises here is P2P lending safe? Yes, P2P lending has become an important part of the financial services sector in many countries worldwide. There is a minimum amount of investment for any particular investor and there is a cap on the maximum loan which can be taken by a borrower. The platform is offered by firms like I2I Lending, Faircents and many others, which are getting regulated by the Reserve Bank of India. The RBI has issued guidelines in 2017 and please check that your company is as per the RBI guidelines before investing. These companies act as intermediaries between the lender and the borrower. By acting as intermediary, they avoid the traditional risk which a bank has to face, as they act as a borrower to every lender and lender to every borrower. With the emergence of new technologies and cheaper cost of communications, P2P lending companies tend to have much wider reach than the banks. The transacting parties do not need to come together physically. Instead, they come together to transact on virtual platforms set up by these P2P lending companies. By use of these platforms, people are able to raise funds and disburse loans from distant or remote locations just by logging onto the virtual platforms provided by these P2P companies. Over to Joel.
There is an ambiguity on whether P2P will be seen as a crowdfunding model or will be seen as a collective investment scheme. The Securities Exchange Board of India, SEBI, has a draft on the crowdfunding, but this is still a long way to go before it gets finalized and implemented. Lack of understanding on the regulatory side is one of the main reasons why P2P has not taken off in India. This is an awareness video to show that there's still a lot more scope for the investors and the platforms to invest in P2P business. The Reserve Bank of India, in its master directions, has defined the NBFC P2P as a non-banking financial institution which carries on business of a peer-to-peer lending platform. Over to Amijit.
The global P2P lending market is anticipated to rise at a compound annual growth rate of 51.5%. The current size of Indian P2P market is around rupees 200 crore and it is projected to be $4 to $5 billion by 2023. Investors, watch out for this growth. 11 P2P players have received RBI license to operate as an NBFC P2P company. The market is good enough to sustain 10 to 12 players. Starting this year, we have also noticed that visibility for P2P lending has enhanced, reaching its target segment, especially with a lot of other asset classes not performing to their best. We expect exponential growth in next 7 to 8 months. At present, there is a cap of rupees 10 lakh for the investors, which has to be enhanced by the RBI to meet the demand of affordable credit. This concept of P2P lending is centered around the lenders getting higher interest rate by lending their money instead of putting it in just savings, and borrowers getting lower interest rates as opposed to getting a loan from a bank. Borrowers are saved from exorbitant interest rates. Serious players will continue to invest in innovative technologies and resources that help to create simple financial offerings for customers and ensure value for all stakeholders in the lending chain. Thank you.
Please leave your valuable feedback in the comment section. Hit the like button, which would encourage us to do more videos. Please subscribe and hit the bell icon for more notifications. Thank you.